The fifth metric, and by far the most important metric when you're evaluating buying a property either as a primary home that you'll later convert to a rental home or just an investment property in general in a particular city, is jobs growth. Okay, now what you're going to look at is you're going to go to the Department of Numbers, okay? Department of Numbers, not city data, and what you're going to do is you're going to type in any particular city or metro area and you're going to find the most recent year shown. It's basically a rolling 12-month average. Now don't get me wrong, March is going to be nasty, April is going to be nasty because of COVID, so typically you're going to allow for that. But in a normalized market outside of COVID, we're going to want to see a 3% year-over-year jobs growth, okay? 3% growth per year. Why? Really? Come on, guys, you know. But if you really need to know, obviously, the more jobs come into the area, that leads to population growth, which leads to home price appreciation, which leads to more people fighting over the same property, which leads to fueling all four of those other metrics, okay? So this is single-handedly the most important metric, okay? So to finalize this all, I want to show you guys something. So here's a quick, easy chart that has magically appeared that I've gone ahead and done. First, what I've done is all of our metrics: population growth, income growth, home price appreciation, crime data, and jobs growth, right? 21% is our population growth. Pulled up Temecula here, we've seen a 98.1% population growth from 2000 to 2017. So yes, that's definitely a thumbs up. Anaheim, pick just another area locally buy. Not saying these are the two necessarily best areas to buy, but just giving you a direct comparison for an example. We've only seen a 7.5%. That doesn't meet our 21% factor, so that's going to get a no or a thumbs down. Next is income. Income, we want to see a 32% growth from 2000 to 2017. Temecula, we see a 51% income growth. Anaheim, we saw a 49% income growth. So both of those meet. Temecula went from $59,000 to an average median income of $89,000. Anaheim obviously went from $47,000 to $70,000. Okay? Now, home price, what you're going to see here is we've seen a home price appreciation. We want to aim for 40%. Obviously, due to this massive population growth here, we can see why house prices went up. They went up 142% over the last 17 years. Now, obviously, home price growth in Anaheim obviously also went up, and it went up 183%. Now, looking at this metric, they both met it, but I'm a little skeptical about buying in Anaheim. Why? Because we didn't see a population growth, but yet we saw a major price appreciation growth. So in Temecula, we can see that home price was directly related to the amount of people moving into the area. So I gave this as a yes because it passes that metric, but in my mind, I'm really giving it a thumbs down. So for me, I wanted to explain to you guys, I'm giving that a thumbs down because we saw price appreciation through the roof, but it wasn't related to more people moving in for a population growth. Crime data, we want to aim for below 350. Temecula is at 146 and it's flat. The reason why I still gave it a yes is because 146 is so low. We don't need to have 146 be constantly declining because that's such a stinking low level, okay? Anaheim, 231, and we did see it decline year over year, okay? So they both get yeses. Now lastly is jobs growth. Jobs growth, remember, our absolute dream number is 3%, right? We are running naked in the streets, spraying champagne bottles, going berserk if we see a 3% growth, okay? Now, we saw 1.4% jobs growth. Now, mind you, this is a little bit skewed because this is all of Riverside County, okay? Because the metro areas on Department of Numbers don't give it city by city. So it's 1.4%. So we didn't meet that. Now, it's not declining, so we are still seeing jobs growth year over year at 1.42%, but it's not 2%, which is kind of the magic yes spot no matter what. 3% is our dream number, okay? We're going to see here, and we're going to look at Anaheim. Once again, this is the Orange County, LA metro area because it didn't break it down. We saw a total of 86,000 new jobs created in that what they divided it up, which is basically northern Orange County area, which gives us a 1.23% growth. So both saw positive growths. Both didn't hit 2%, nor did they hit that running naked in the streets 3%. But, so I gave both of those a no. So I'm comparing these two, and I'm looking and analyzing where I'm going to buy a property or where I'm going to buy an investment home. I see 4 thumbs up for Temecula, and I basically see only 2 thumbs up for here. So I would go the route, Temecula route. Now, I'm not saying Temecula is the absolute perfect proper place to buy an investment home, but this is the sample calculation that you obviously want to do. Now, it's super important to be able to do this, so we can see that our final score here is 4, and our final score here is 2. So 2 out of 5 and 4 out of 5. Now mind you, this is the most important one. So even if, let's say this is a no, this is a no, but this is a 3%er, whoo, jobs growth. When jobs are coming, income's going up. House prices are going up. This is your most important metric. So when you're looking at something, if you can hit a 2, we're happy. You hit a 3, we're spraying champagne, running naked in the streets, right? So that's the breakdown. I really want to hope that gives you guys a really good idea when you're analyzing on how to buy different investment properties or analyzing if you're truly making a correct investment for the purpose of holding an asset and renting it out. Stay tuned for more Truth Bombs from Brian Decker.